So these are Goldman Sachs, JP Morgan, and 9 other top Wall Street firms who are sharing their predictions for 2023. Let's have a look. And those are the organizations that I'm going to take you through now. You might want to grab a pen and paper on this one. What does Deutsche say? Deutsche is saying a mild recession in the back half of 2023 is likely but not guaranteed. Seems to be the line most are taking. An economic contraction would lead to a pullback in spending on goods and housing-related products. As to be expected, several leading economic indicators, including those of consumer and housing market, are flashing red. There we go, pretty middle of the road and much to be expected. Anybody saying anything different? Oppenheimer, it's still possible for the US to avoid recession. Inflation is finally falling. So yeah, they're telling us what we already know as well. BMO Capital Markets, heading into New Year, Belsky believes the US economy is on thin ice. Yeah, okay. JP Morgan, recessions are highly likely next year. Highly likely. That's slightly different because what they're saying is we're going to get one. So there we go. Lower rates will be a catalyst for the recovery, but a dovish pivot from central banks won't come without first having softer economic conditions, a higher unemployment rate, more crucial continued decline in inflation. Yeah, well, anyway, they're at least saying something slightly different, which is we're guaranteed a recession, basically. Credit Suisse. Global growth is just 1.6%. It'll be unusually weak. Yep, because of our rising interest rates. And we've got a problem with inflation. US can avoid a recession. Yeah, so they're sort of sitting more on the fence. Bank of America, the economic slowdown that's already underway in the US will morph into a recession. So they're definitely also saying a recession's going to happen as well. And it won't be painless either, but they're putting some kind of positive spin on it. Okay. Goldman Sachs, the US economy avoids a recession in Goldman's base case. They do a base bull and bear case as well, though there remains a distinct risk. Yeah, they don't just sit on the fence. They've got a butt cheek on 3 fences, the bull, the bear, and the base case. They're never wrong. They're Goldman Sachs. The next 12 months, Goldman Sachs sees just a 35% chance of a recession and a 35% chance of the economy staying where it is and a 30% chance of it doing rather well, effectively, basically. That's what they're saying. So they're just spreading it everywhere. There are strong reasons to expect positive growth in coming quarters. Okay, bit positive, I guess, in an odd way. Economic outlook, expect global growth to fall from about 3% to below 2%. There, again, nothing which is overtly too positive from Citigroup. Morgan Stanley, unlike almost all of its Wall Street peers, Morgan Stanley still isn't calling for an economic downturn in 2023. Even though it's banking on earnings recession. Okay, so it's a bit more on the positive side. Inflation has hit a turning point, will continue to fall. This is important. So they're different. They're different. They're bullish. I should say credit for all the words that you see on screen to Business Insider, who also did all the work. I'm just giving my commentary on their phrasing. Global growth will clock in at 2.1%, say UBS. Okay, a bit higher than some of the others. We think US expansion is headed for a hard landing. Okay, so that's not positive. Inflation will fall faster than expected. That is positive. But a 2 percentage point jump in the unemployment rate and negative GDP won't be enough to keep the US from its second recession in 4 years. And that's negative. So they've mixed the positives and the negatives. Truist, the US economy is stronger than most of its overseas counterparts. But this won't save it from a recession. They're forecasting a recession. Quite a few companies are forecasting recessions. What's the good thing about that? Well, the good thing about forecasting a recession is the stock market starts rising 12 months from when a recession is first forecast. So that'd be about now. These guys are forecasting it. We should start rising now because it looks beyond that and what's going to happen on the other end. So in one sense, it should be a good year for equities if history is anything to go by, and history is never much of a guide. Don't forget my campaign for $1million.com for more free videos, tools, resources to help 1 million people become better investors, including free downloads of my books as well. Enjoy.